Today I want to explore the valuation of ETSY. ETSY IPO'd at $1.8 billion. That was $16 a share. And a lot of people are looking to invest in it. I just want to make sure, if you look at the financials, that you realize that the company is currently losing money. They had a 9-cent earnings per share loss 2 years ago in 2012, and they are that loss has climbed to 38 cents per share. They even state in their prospectus filing, where they talk about risks of investing in the business, that they've incurred net losses of up to $15.2 million. They've accumulated a deficit of $32.4 million. And they even go further to say that we may not achieve or maintain profitability in the future. Now, I realize this is commonplace for a lot of tech companies. Look at Facebook, that's trading very high. All I'm trying to say is that there is a lot of risk right now with the business. At least Facebook is making a lot of strides to increase revenue and profitability. Be careful of the hype that the revenue is growing at 70%, which it is. The way the company's model is based, and the point that the cost of goods sold is 38% of revenue, and the operating expenses is currently 66% of revenue, means their expenses are outweighing their revenue right now. So the revenue could grow at 500%, and the company can still be unprofitable. So what you want to do is look for strides that the company is taking to talk about hopefully reducing their costs as the company grows. If you look further into their financial reports, into their cost section, they unfortunately do not indicate that. They actually go further to give an example saying that as a percentage of revenue, as revenue increases, and they specifically relate to direct checkout revenue, there may be a dampening effect on gross margins. So they're actually going further to say, as revenue increases, their cost of goods sold, or their cost associated with that revenue, might even increase further. So it's tough right now to see a very attractive, without any additional risk, value in this company. Obviously, for an investor, if you want to assume the risk, there are chances, looking at the track record of a lot of IPOs of tech companies recently, based on the flow of investors going into the stock, that there will be a lot of investors coming in. And just on that alone, the psychology and the supply and demand of what's coming into the market, maybe the stock price is going to go up. But if you want to look at, and if you're a believer in the financials of the business and the cash of the business should support its valuation, it's not quite there in ETSY. So if you have any further questions, please contact us at New York School of Finance.